Hi, I'm Adeline. On April 2nd, Trump launched a global tariff war, causing turmoil in the global investment market. Many political and business leaders and economists criticized Trump's tariff policy as disrupting post-Cold War international order. Countries like China have also posted tariff retaliation towards the United States, drastically destroying the long-term American-led multilateral framework and further pushing Sino-US relations toward the cliff edge. In fact, there have already been a number of geopolitical volatilities long before the Liberation Day, such as the ongoing Ukraine war and the rise of nationalism and protectionism in various parts of the world, further stirring up global uncertainties and the rise of black swan events. Many braces for global economic recession under this geopolitical mayhem. Then you may ask, what's the impact on global investment markets and financial risk? Our global stock markets have been going through a roller coaster ride as a repercussion of Trump's tariff policies. Even though US inflation eased earlier, Trump's tariff had put upward pressure on consumption prices and made it less likely for the Federal Reserve to cut interest rates, at least for a while. The weakening of US dollar has shaken investor confidence in US asset classes and sought returns in other countries. The shift suggested diminishing US exceptionalism and the switch of US dollar to other currencies as a safe haven. However, political risk can strike global currencies in the ripple effect, spreading beyond the United States and China. Smart investors like you may ask, then what can I do now to protect my investment? Well, saving insurance plans could be a much safer and more stable investment choice, as no one can accurately predict market changes, particularly under this intense volatility. In fact, this possibility is supported by historical references. Suppose we look back on the 1929 US Great Depression. A large amount of capital was transferred from equities, bond markets, and commercial banks to saving institutions. Although life insurance has a very latent development, the amount of capital flow into insurance resonates with saving institutions during that period. This historical example suggests that insurance is among the best investment options in social turbulence. Correspondingly, during the 2008 financial crisis, which was the worst economic downturn since the 1929 Great Depression, hundreds of banks failed as the subprime mortgage bubble burst, notably Washington Mutual, which was the largest loan and saving institution in the US until its downfall in 2008. On the other hand, few insurance companies have needed government intervention to protect policyholders since 1994. These cases suggest that insurance could be an investment option which transcends political periods and risk. As nobody can predict what will happen in the upcoming days of Trump's presidency, the tariff chaos could open Pandora's box of political and economic upheavals. Be wise, stay safe, and consider saving insurance plan as your lifeboat to ride through the storm with hope. That's all for now. See you next time. Bye!